it's your opinion that the best way to use money is to buy companies.
Productive assets.
Productive assets, because they are working right now for you in a way, right?
I have hundreds of the world's top CEOs at this very moment working on my behalf to build my net worth. They have no idea who I am, but I know them, and I appreciate them.
Hey guys, I'm Chaz Roberts. I'm a personal injury lawyer. It's my life's passion to bring the law to the people, and that's the purpose of this podcast. You are listening to Law Have Mercy. Please enjoy.
I am super excited for our next guest, AJ Toce with Toce Financial Group. How you doing, AJ?
I'm doing great, man. Thanks for having me on.
Awesome, man. We're going to talk about one of my favorite subjects, money, right?
A lot of people's favorite subject.
You going to teach us how to make some money?
I can teach you how to make some money, yes.
Yeah, man. Well, I'm seeing a lot of stuff going on in the news about a possible recession, and everyone's kind of freaking out right now. What do you think about that?
From my personal perspective, I'm not worried about a recession. I think that it's really important to take a long-term focus and realize, like there's a saying in the business, if it doesn't matter 5 years from now, it just doesn't matter. That's for someone young like you and I, who, like, when we put away money, we're saving money, I'm probably not thinking about touching that for about 20 years. And so what really matters to me is what are my assets going to be valued at 20 years from now when I actually need someone to buy them from me or want someone to buy them from me. So, whatever happens in the meantime, I mean, I think for my clients, I'm trying to help them prepare for a recession, not in their portfolio, but in their day-to-day life. A lot of them are solo entrepreneurs, and recession, I mean, stock declines are correlated with a recession, but recession means that the economy is slowing down, less business is being done, which for a lot of solo entrepreneurs, that can mean a drastic drop in revenue. And so I would hate to see someone spend all their time worrying about their portfolio that they don't even need valued in anything right now, and miss an opportunity to shore up their day-to-day operations.
And so with your group, you're actually a lawyer, right?
Yes, sir.
And you are also a financial advisor?
Yes, technically the term is investment advisor.
An investment advisor. And so what do you do on a daily basis?
Yeah, so overall my mission is just to build the net worth of my clients. What I do on a daily basis is I do pretty much look at markets every day, although I wouldn't say that that's necessary, but I do like to be in the know. Anytime someone has a question for me, I want to have an answer that I've already kind of thought about. But I spend a lot of time studying businesses. And
that's to make your clients money.
Yeah.
And that's the goal, right?
Well, before I was even an advisor, I was doing it because it's just awesome and fascinating. And then I started making some investments, and they were working out, and I started to feel like, wow, actually really, I dig this. I understand this deeply. So I'm still doing what I would be doing if I was just, retired, sitting on the couch or whatever, but I'm bringing other people into it so that they can share in my success. Yeah.
So the fact that you're a lawyer and that you're an investment advisor, is that the proper term?
Yes.
Okay.
If, by the way, sorry, I just want to make, there's so many of these terms: financial advisor, financial planner, investment advisor, financial consultant, and they're all really similar. We could get into a little more later, but I am an investment advisor.
Well, it's ironic to me because most lawyers are bad with money.
It does seem to be the case.
Why is that?
I think that there's a lot of reasons for that. Mainly, I think that being good with money has more to do with temperament and discipline than it has to do with knowledge. And lawyers lean heavily upon what they know. And I also think, I don't want to rub any lawyers the wrong way, but they don't like to admit that they don't know stuff. And I think that society sort of views, oh, you're a lawyer? Oh, you must have a lot of money. Oh, you're just kind of expected to know what to do with money. So that makes admitting that I don't know what to do with money even harder. And you combine that with the fact that the state of the industry today is such that I think oftentimes lawyers will encounter an advisor and they don't necessarily respect that advisor intellectually. The lawyer feels that, Like, I'm smarter than this guy. Why would I trust him with my nest egg? Right. And oftentimes that's true. Straight up. And then the last thing I think is that what I experienced in law school is that lawyers don't really like numbers. My dad's a lawyer.
This is very true.
He'll say, I hate math, but I can calculate a third of anything.
So, I mean, I hate to just box in lawyers. Do you find that people who are good at making money in their day job or their business aren't necessarily the best investors?
Usually not. If that person who's good at making money in their day job would stick to investing in businesses that are similar to the one that they're successful in, they can be good investors. So there are doctors who invest in pharmaceuticals and medical technology, and they do pretty well.
They're using their informational advantage to potentially prospect. And
this is Warren Buffett's rule number one is stick to your circle of competence. And he'll quote Tom Watson, who started IBM. He says, I'm not great at a lot of things, but I'm great in spots, and I stick to those spots. And so for me and for most people, if you're using that as your first filter, that filters out like 95% of everything out there already. And oftentimes I'll have, like, people want to ask me about biotech. Like, literally a couple weeks ago, somebody was talking to me about a biotech stock, and I just said, I don't invest in biotech.
And he said, what is biotech?
Biotechnology is like, I don't even really know how to define it. That's how little I know about it. But like CRISPR would be, I think that would be like genomics, but creating new drugs. I would think like Moderna, like the mRNA vaccines, like that's biotech type of stuff. And it's something I use that as an example because I literally know nothing about it, and I'm no good at it. But it's a sector.
You would avoid investing in that.
I'll never invest in biotech
because you don't know much about it.
There will be amazing advancement. There'll be great investments in that space that I'm never gonna have, and that's fine because all I need to do is pick my winners. I don't need to be a part of like every hot thing.
So when your average client comes, what's that process look like when they come and they say, I want to invest this much money? Or do you have a conversation about what they want to invest, and how does that work?
I usually start with asking them their experience and try and kind of fish out what their preconceived notions are about investing. And then
why is that important?
Because it drives what they expect me to say. For example, life insurance is a topic of conversation a lot. There's a lot of people who have bought whole life insurance because their grandpa told them, whatever you do, just make sure you have life insurance. I don't want to discover they have whole life and say, oh, we need to ditch that. You don't need that. Because now I'm stepping on their grandfather's wisdom. And really what I'm trying to do is just like kind of walk them down this logical path to show them like that there's a million options, but there is some clear answers of what you might want to do with your money. But those answers wholly depend on the temperament of the person, like what kind of person they are, what kind of stuff they see in their future, what kind of stuff. A lot of times it's like, what financial media are you intaking? Because if they've been spending the last year listening to some guy on YouTube who like reads charts and tells them how to just like, this is a cup and handle, and this is a golden cross and all these things. I know that I'm going to have I got a lot of work to do, because the truth is that that's like, people say it's like horoscopes for dudes. Like chart reading isn't actually a way to consistently make money, but I mean, it's so easy. Like you just look at it, it's right there, and you say, oh, okay, there's a pattern. I'm going to trade off of that. It doesn't require a lot of hard work. So anyways, it all depends on like where that person's head's at, and it could be in a million different places. So I kind of need to narrow down who I'm talking to.
And it depends on how risk averse they are. What's their time horizon?
That's definitely
on when they'll
important.
need the money.
Yeah,
because the stock market you could invest the money today, and the stock market could tank tomorrow. Mm-hmm. Will they call you and say, I can't believe you did this. I can't believe I lost all my money.
Absolutely.
And that time horizon could be 5 years, 10 years, 20 years, 30 years, whatever.
Yes.
And you got to get to the bottom of that.
Yes.
Because that would shift how you invest the money.
Yeah, and there's things like I might say, hey, look, we're long-term focused. We invest for the long term. And they're like, yeah, me too. And then an hour later in the conversation, I realized that when they say long-term, they mean 6 months. When I say long-term, I mean like a decade. And so we might be saying the same thing and not saying the same thing.
So does the dollar amount of the person who is trying to invest matter on the strategy?
It can in some situations, but generally no. Like a lot of people think, I suspect that a lot of people don't seek out professional help because they're almost like sheepish about like, well, I only have $5,000 to invest. So it's like not even worth their time to talk to me. I don't even know if I can invest with that little amount of money. With modern technology, you can be investing like $3 a month, you know?
You could have no money and start an investment plan.
You have no money and start an investment plan, and you should.
Because they can kick off $50 a month to you, and you can invest it, and that money could potentially grow, right?
Yes. And let's be clear. It is true that I'm like not really going to make much money off of that, at least not like immediately. But what I'm trying to help people do, it's all about, like I said, it's temperament and discipline. You don't have to be a genius. You don't have to have you don't have to be well-researched and have some brilliant idea. You need to consistently contribute money. You need to be earning more than you, or I should say spending less than you earn. You need to be underspending your income so that you can enter the investment game in the first place. And then you need to be disciplined and diligent and patient. And these are kind of like the things that people don't want to hear. Like a lot of times people want to believe that I've got 6 screens in front of me and I'm like, buying this and selling that. And like, I just have this system and man, if you just give me your money, I'm going to double it in a couple years or whatever. And that's just not the case.
And anyone who promises that they can do that, run far away from them.
Yes. Anyone who tells you that they know what's going to happen in any asset or market in the next year, you don't need to listen to them.
And these are the top guys in Wall Street. Those guys don't know.
Oh, nobody knows. Yeah. I mean, people have been clowning like Nancy Pelosi and other members of Congress who are buying and selling stocks thinking that, oh, I can just, if they buy something, I'll just buy because they're in Congress. Like they have to know what's going to happen. Nope. They have no idea.
No, in fact, I've followed someone on TikTok that follows the spending or the purchases of members of Congress, and I've watched some of the stocks, and some of them have tanked. Yeah. I remember one was a video game, Roku or not Roku,
NVIDIA.
Yeah, one of them, and it just absolutely tanked after they bought it. Now, why would a member of Congress buy a video game stock? I have no idea what tipped them off to that situation.
Well, I don't think that these people are actually sitting on the computer themselves and making investment decisions. They all have a guy. They all got an advisor, someone like me who's like probably not even asking them first. It's just discretionary authority. You and I sit down and have a conversation, and once I understand you, I don't need to ask you every decision I make. This is why you hired me, because you don't know what to do. And anyway, so...
Well, that's a good question. Should the average person, even with an advisor, buy individual stocks?
The statistics are not good for individual stocks.
Why is that?
Because most of them don't do well. I mean, the vast majority of stocks just don't do well. I'm probably going to butcher this stat, but like 90% of the stock market's performance over the last like 100 years can be attributed to like 5% of the companies, something like that. Like,
so most companies fail.
Most companies either fail or they just don't do great. Like they'll flounder for years. Maybe like look at Twitter. Twitter IPO'd. It was a great product. I love Twitter. I mean, you just mentioned Twitter. It hasn't been a good business. So you never know. I mean, every once in a while, if you're in your circle of confidence, you actually know something the average person doesn't know. Maybe you can find a business that's going to outperform the average.
How about Tesla?
I mean, everybody wanted to buy it when it was cost $1 trillion, and now that it only costs $300 billion, nobody wants to touch it. And that highlights exactly why individual investors buying individual stocks don't do well, because Tesla's go ahead.
So if I bought Tesla 6 months ago, I'd be losing my ass.
Yeah, you'd be down like 70%.
Wow.
Something like that. I mean, from its peak, it's down 70%. Maybe you're down only 50%.
And I can think I have a bargain and buy it now, and what can happen to it?
A stock that's down 90% is a stock that was down 80% and then got cut in half.
Wow.
So we call that catching the falling knife. You don't want to do that.
Wow. And so what if you don't invest in individual stocks, what's your other option?
So I'm full of cliches. Sorry about it. But they say, this is John Bogle, the founder of Vanguard, largest asset manager in the world, inventor of the index fund, which is now the most popular investment vehicle. He would say, don't search for the needle in the haystack, just buy the whole haystack. Because if you want to own the next Amazon, the next Apple, the next Microsoft, the next Tesla, whatever, if you own all of them, then you definitely own those. And those will make up most of the performance in your portfolio. So you just want to make sure that you're not missing out on those. So just buy it all.
So if you are a new investor and the market is down 20, 30% from its all-time high, mm-hmm. you could potentially just buy every company with an index fund, mm-hmm. and over the long term, you should do well.
You're hard to use the word guarantee in our business, but you're basically guaranteed to do better than most people by doing that, believe it or not.
And is that the strategy that you recommend?
To most people, yeah. And that brings up another cliche, if I may.
Bring it.
Which is, this is actually from journalism, but they say if you want to make a killing, lie to people who want to be lied to. If you want to make a living, tell the truth to people who want to hear the truth. And if you want to go broke, tell the truth to people who want to be lied to.
It's going to take me a little while to follow that one, but I think I got it.
Telling the truth to people who want the truth, I'm telling you straight, hey, you come to me and you say, I have no preconceived notions about like how much money I can make. I don't fancy myself some master investor who's going to impress people with my portfolio, and I get to talk about these hot names like people talk about their fantasy football picks or whatever. You're just a person who wants to know the truth. I'm going to tell you the truth, and you're going to thank me for it, and you're going to do very well, and I'll make a modest living by doing that. But there's so few people like that.
And the truth is, buy every company.
The truth is that you're not going to get off your couch and win the Olympics. You're not going to come from just a regular average person who hasn't studied in depth and then like come out and beat like all the hedge funds and like what do you know that Goldman Sachs doesn't already know?
Right.
Right. You have to have some kind of edge. You have to be right where other people are wrong.
And for that information to come all the way down here and go through New York and D.C. and all for us to have that information, we really don't have the latest and greatest, right?
No. In fact, there used to be, have you ever heard of Thomson Reuters? It's a financial publication. I can't remember the guy's name, but Reuters, the original guy, literally had a messenger pigeon service. He would send messenger pigeons to his clients, and they would receive market information before their competitors, and they would trade off of it and get rich. But the internet exists now.
But now in the digital age, but still, there's the informational advantage with the players there, right? Before that information is
probably so, but it's probably not as strong as you would think. I think everybody receives the information instantaneously, like as it's happening, and you gain an edge by being a better critical thinker and coming to better conclusions with the same information.
Understood. And some of that comes from discipline.
A lot of it comes from discipline. Yeah.
And
being brutally honest.
So if I'm sitting on the sideline with some cash and or let's take one of my clients. One of my clients recovers a sum of money in a settlement, right? They come to you and they say, I have this money, but AJ, I'm really worried about, I'm watching the news. I see that we're in a recession. I see there's a war in Ukraine. There's a lot of uncertainty. Maybe I should stay on the sideline longer. What is your response to that?
It's a good question. And in my head, what I'm thinking is absolutely not. That's not a good idea, because the stats say that it's not about, another cliche for you, it's not about timing the market. It's about time in the market. And all stats show like the best thing for you to do is put the money in the market right now. Now, that's like the logical level, but humans aren't logical. And I don't want to tell somebody, no, man, go for it. Put your money in the market. Trust me, 10 years from now, you're going to thank me, which is true. But they have to make it 10 years. And if they have the type of personality where they're going to be a nervous wreck every time the news says stocks are down, then I might say, look, maybe you'd be better off somewhere else. I mean, we definitely want to keep them from spending the money, right? I mean, even putting it in a savings account and letting it generate like 3% interest is a hell of a lot better than just frivolously spending it. But if someone's really interested in investing, we sit down and we come up with a plan, and we have to think beyond just this money, what stock? Because it depends on what your whole life situation is.
But we know we're buying a 20% discount from all-time highs.
Yeah.
So by saying that we're not going to invest, we're saying, what we're telling you is the stock market will never be higher forever.
Correct.
The stock market will never be higher than what it once was.
Right. We're saying the best is over, and here comes the decline of the country, which a lot of people believe right now.
But just the federal government's printing money and inflation, that kind of, just money growing, the amount of money circulating in the environment, doesn't that disprove that we'll never go higher? In the sense that there's just going to be more money in the system.
Well, I think that is proof that our system is very strong, because we're dealing with some inflation, but newsflash, the whole world is, and a lot of countries have it worse than we do. So we're still kind of like the strength of the dollar is at all-time highs. Just a few months ago, I think The Economist or Time Magazine or something, they had a picture of George Washington like popping out of the dollar and flexing, which of course was the top. Like that was the height of the dollar's strength. But I think if you told me, prove to me that the market's going to go higher, prove to me that the best isn't over, I will tell you that the chart of the market, like the S&P 500, the general market, is really a chart of human achievement. Every time we figure out a new, better way to do something, add value, we all get wealthier as a result, either directly or indirectly. And
that's the automobile. That's the cell phone. That's
look at the internet and cell
internet,
phones.
5G. Now AI, right?
Yeah.
All those
Talk
things.
about ChatGPT.
Right. So all those things will increase human innovation, make companies worth more.
We're all so rich compared to the richest person 100 years ago. We're all richer than them. I think it was Blaise Pascal that said, like, man's problem comes from the fact that he can't just sit in a room and stare at the wall and do nothing. Can't do it. We have to do something. We have to be achieving. We have to be innovating. We have to be competing. And that's why things keep getting better and better, because it's like a compulsion.
So are you suggesting that some of the best investment strategies might be to do nothing? Or at least boring?
Yeah. Dude, doing nothing is like I think in video games they call it OP, overpowered. Like doing nothing is so OP. It's like another probably the second most famous Bogle quote is when everyone's saying, don't just stand there, do something. The intelligent investor says, don't just do something, stand there.
Interesting. Now, when we say do nothing, we don't mean leave the cash in a bank account.
Correct. No, we mean stay where you're at.
Because what happens to cash in a bank account?
If you put 10 grand in the bank like 50 years ago, let's take from the day I was born, because I looked this up recently. Let's say you put 10 grand in the bank 34 years ago, the purchasing power now would be worth like $3,000 today. Meaning like today, $3,000 will buy you, I don't know, can't even buy you a used car or anything anymore. 10 grand could buy you a used car, but $3 won't. So money, like there's actually a famous story about like a World War II veteran. He put money under his mattress. His grandkids, after he passed, were cleaning out his house, and they found all this money. They found like 10 grand literally under the mattress. And he put it under there like during World War II. And doing the math, if he would have put that in the stock market instead, he wouldn't have 10 grand. He'd have like $50 million. So that's the cost of doing nothing.
My client, we settle a case. My client gets a lot of money. What would you recommend that they do?
Thank you first. Number one thing that I usually tell people to do in a context like that with a windfall is think of something that you've really wanted or something that you really wanted to do for a while, but you couldn't afford it, and go do that thing within reason. I wouldn't spend any more than like 10%, might even be a lot, but treat yourself a little bit. Exhale, say, okay, I'm in a new financial situation now, and tell yourself that you're never gonna go back, right? And the way you're gonna stay in your new situation is you got to create a plan. And I mean, obviously I would advise like talking to somebody, talking to a professional. They're going to help you understand things about yourself and your situation that you might not have thought of before. And that'll lead to better decision making with the money. After that, I would say definitely a no-brainer is if you have any high interest debt, like credit card debt, get rid of it. That's like a cancer to your finances. So just go ahead and pay off the debt. After that, I would say it's good to have an emergency fund. I mean, I know I said that like I don't really have one, but I'm the exception. So don't do as I say, not as I do, I guess. But you want to have if you have a chunk of money set aside, it's there. You're going to sleep better at night. You're going to feel more secure, and it's actually going to allow you to take more risk with the rest of the money because you'll feel more comfortable. And speaking of more risk, I say, take 25, 50, maybe even 75% of the money. Take a good chunk of the money and start your investment career. If you haven't yet, start your investment life. You're going to build discipline. You're going to build habits. You're going to learn a lot, and your savings are going to grow. So you're going to take this money and you're going to turn it into more and more money, and it's not going to happen fast, but it is going to happen, and you'll be better off for it. Idea. Well,
I've had some clients that really figured it out, and what they said is, I'm going to invest it all in Bitcoin. Mm-hmm. What do you think about that?
I bet they're not super happy about it if they did it in the last 5 years, because I think we're still below the 2017 high right now. But what's fascinating to me about Bitcoin is that I'm not a Bitcoin millionaire because I bought Bitcoin in 2013 and I doubled my money and sold in 2014 and I never went back. Because I was like, man, I just doubled my money on this magic internet stuff. Like, I felt like a genius back then. Little did I know. But I see the rhetoric around investing in Bitcoin is like they nailed it. You find something that you're super convicted about, you buy it, and then you don't listen to what anyone else has to say about it. You've already made up your mind. You've hitched your wagon to this thing. They call it hodling, right? Hold on for dear life. That's exactly the right attitude. I don't understand why they can't apply that to like actual businesses, like productive assets, because they'd be way better off if they did.
For the record, here's the 5-year chart of Bitcoin. I don't know if you can see that on your screen. And if you can kind of just tell us what we're kind of seeing here.
So what you're seeing is let's see. You might have to, it's been even more than 5 years now. Can you just go to like do like an all time? You see that peak and kind of in the middle, that was like the 2017 mania, or like the news headlines, like people are mortgaging their house to buy Bitcoin.
Yeah, right at the end of 2017, heading into 18. Looks like.
Yeah, and then I mean the chart really doesn't do it justice. You would have to kind of zoom in because of that's just the way charts work. We call it the chart crimes. Where like right now it looks like not that much, but it went from like 17,000 to like less than 3,000. And so, you lost most of your money if you bought that peak. But if you hodled, if you held on for long enough, then you got to experience those huge highs. The funny thing, though, is that during those huge highs, everybody was saying, I'm not selling now. It's going to 100. Like no one buys the lows and sells the highs. People tend to buy the highs and sell the lows.
No, I'm the guy that buys, doubles my money, and then I go real big in, and then I lose my ass.
Do you know that's you're not alone? Isaac Newton did exactly that. And he was pretty smart.
Yeah, he's a pretty smart guy.
Isaac Newton got in at the beginning of the South Sea bubble and rode it up and then sold. And then after he sold, it went up like another, who knows, 200, 300%, and he couldn't miss out. So
FOMO.
He went big, and then it crashed. Yeah.
Yeah, well, you heard a lot of people talking about crypto for a while, and you don't see those guys anymore.
Not really.
No,
Not really. But the true believer would say, well, this is crypto winter, and it's happened again, and the halving is coming up next year, and this is just a cycle. And if you can't if you can't handle me at my worst, you don't deserve me at my best, right?
theoretically, if you would believe in crypto and want to invest in the space, would you only go for the blue chip, the Bitcoin and Ethereum? Do you think that everything else is wildly speculative and dangerous?
Not Dogecoin?
Yeah.
You say that like Bitcoin and Ethereum are not wildly speculative.
Yeah. Yeah. Good
no,
point.
I mean, I'm going to tell you the same thing with any investment. Don't do it if you don't feel like you know what you're doing, like you understand what you're actually buying. If you're buying it because you think someone will pay more for it later, that's called greater fool theory. You need someone else to buy it from you for a higher price, but then they have the same problem. The only reason they're going to buy it from you is because they think someone else will pay higher price, right? That's the nature of bubbles. But
can the same be said for stocks?
Absolutely. Yeah. I mean, every asset is the same, more or less. Like,
yeah, I guess
as far as how it affects your psychology, the counterintuitive things that you need to do to be successful. The more volatile it is, the harder it is to handle if you don't, because like I said, the reason I mentioned, like most people are buying it because they just think someone else will pay more. You can't be super convicted about that, because as soon as people stop paying more, your whole thesis is blown and you don't even know what the hell you're owning. You feel like an idiot for even having it in the first place. Like, what am I going to tell my wife? I lost half our money in this Bitcoin. I can't even explain what the hell it is.
It's an algorithm, damn it.
Right, like, right. But I mean, so if you have a thesis like, blockchain is a ledger. Ledgers are valuable. They help you keep track of things. Double entry accounting is a ledger, and a lot of people say that it like pretty much brought us out of the dark ages. So having a powerful ledger that is trustless and uses cryptography to allow us to honestly keep track of things without needing any bank or anybody. Like, I don't need a bank. You have to trust somebody at some point. So I'm trusting a bank. When the bank says you have the money and you are who you are, I trust the bank. But with Bitcoin, or really anything that trades on a blockchain, the trust factor is eliminated, which is great. And so blockchain is a real technology. It is here to stay. But can't I trade? I mean, we know now you could trade. There's 20,000 different things trading on like 18,000 different blockchains. Like,
well, I'm gonna play devil's advocate and throw you a big softball.
All right.
What is money? What is the dollar? What is that backed by? Right. I mean, that's the counter argument, right? If Bitcoin is nothing, well, what is the dollar?
Well, I don't want to be backed into a corner where I'm a dollar advocate now, because I just told you I don't really hold many dollars. I hold assets, productive assets. But you're right, and this is what the Bitcoiners would say is like, how's that different from the dollar? It's only worth what we all agree it's worth. You know, I mean, if you went somewhere where no one knew, somebody like didn't know what America was and they didn't know what the dollar was, they wouldn't give you anything. I'm not going to trade you this fish for a stack of paper,
right?
You know, so it's only worth what we agree it's worth. But there's very good reasons to agree that dollars are valuable. Very good reasons.
Some people would say at one point it was gold, but now it's nuclear bombs, right?
Bitcoiners say stuff like that, yeah.
Okay.
So another recent thing, and I want to get your take on it now that some time has passed, but the whole like meme stock, AMC, GameStop, whenever that went down, what was your take of what was happening like through Robinhood and Reddit and all that at the time? Yeah. And then what is your take now with some time has passed and we have some perspective?
Yeah, I think AMC and GameStop are on their way down. I think I'm just saying, because I think just this morning I got a little alert that they're both at 52-week lows. I was on Wall Street Bets in 2015, 16, and it was a glorious place. I loved it. It was just people were so degenerate, and like it was like the last bastion on the internet where you could still like say offensive things to each other, and like we're all just laughing and it's cool and it's funny and no one's canceling us or shutting us down. And then there's this guy, DFV, Roaring Kitty, who started posting due diligence on Wall Street Bets about GameStop. And he was saying, look, I'm just telling you, based on what I'm seeing, I think this thing's going to squeeze. It's going to go way up. Michael Burry's putting it in his portfolio, and he was every week he was posting, and he was posting screenshots of his position, 6-figure position in this thing, and then starts going up, and then starts going way up, and then it starts going way up.
But he was actually pumping the stock through Wall Street Bets.
Not intentionally. Intent. You're a lawyer, but I don't think he was doing it intentionally. I think he was just sharing his due diligence and his passion and having a good time. But what ended up happening was a bunch of people piggybacked off of that. And then the reason all this happened on Robinhood, important fact, is that it all happened through options trading. Options, an option is like juicing. Like instead of putting $1,000 in the stock, if I put $1,000 in the option, I can 100x my returns, or 100x my losses if I'm wrong. So it's just a way to just juice up. And people didn't really understand options trading. Like if you look on TD Ameritrade and the options chains, it's archaic. Robinhood is gives you an up arrow and a down arrow. It's do you think the stock's going to go up or down? And you hit the arrow and it's maybe you should buy this option. And you just said, okay, buy. So it basically made every teenager a hedge fund, and they used it to the fullest extent. And obviously the pandemic had something to do with it too. Where they say, hey, stay home, don't do anything, and here's some money. People gonna gamble, right?
Right.
But what I witnessed had nothing to do with sticking it to the hedgies and fighting for the little guy. And there's nothing philosophical about it. It was just we figured out a way to make some money. These hedge funds are stuck out. They overshorted, and we're going to screw them. And they did. And it was great. It was glorious. Melvin Capital was the company that really got the short end of that. But then you saw copycats coming. So when I was on Wall Street Bets, there was 250,000 people on it.
But let me go back. Yeah. Did it actually work? Did people make a lot of money on the stock?
Oh yeah. The first way, yeah, initially, yeah. But you're always.
But you have people that held and thought it would go even higher.
Well,
right?
Yes, and if you make money, it means someone else lost. You made it somewhere, and it didn't come from corporate profits, because GameStop's a losing company. They don't make money, so it didn't come from corporate profits. It came from out of another investor's pocket. You're playing poker, and you're winning. But that doesn't mean if you don't leave the table, you could lose all yours to the next guy that comes along. And there always will definitely be a bag holder. Someone's got, they call it your exit liquidity for someone else. Let's say I bought GameStop at $2, goes up to $100. I don't want to own it anymore. I want to sell it. But to sell it at $100 when everyone knows it was just at $2. So how do I convince you to pay $100 for something that was just worth $2? Tell you it's going to go to 200, and then I stick you with the bag, and when it all crashes, I took my money and left, and you're the one that has the problem, not me. So that's the truth of what happened. But people, making money is evil now, so you have to come up with some sort of moral, altruistic reason why you're doing this. And it's the market's been rigged against the little guy for so long. We got to stick it to the hedge funds, blah blah blah. Truth is that's all just gambling. You're just gambling, and you're gambling against a whale at the casino, and you got one over on the whale. Good, that's awesome. But that doesn't mean that there's some moral crusade we all need to go fight now to screw over hedge funds and poor little degenerate gamblers. The reason I mentioned that I was on Wall Street Bets earlier is because we were self-proclaimed degenerates. We're not trying to change the world and be special. We're just gambling. I wasn't even real. I didn't have any money to gamble. I was in law school, so I was just watching. But yeah, it really is that simple. And then the group went from 250,000 to 8 million. So the people on Wall Street Bets now are at the GameStop time. That's not even Wall Street Bets. There's just a bunch of new people that have nothing to do with Wall Street Bets that just want to get rich. And so then the next thing, they just took they just copy pasta all the due diligence of GameStop and said, apply all that to AMC now. And now AMC is going to be the squeeze that we're going after. And it's for the righteous crusade.
And that's not good sound financial advice.
Of course not. And they know that. Everybody knows that.
And you think more people lost than won in that situation?
I know for a fact.
Yeah.
I know for a fact, because when I get new facts, I change my mind, right? Like when the facts change, my mind changes. And hedge funds can pivot in an instant. They can be short, and then by the next day they can be long, right? So it's just this assumption that like, oh, the hedge funds are stuck short. No, they're not. And once you're on the internet displaying what you're about to do, the hedge funds front run that, and you get stuck. Speaking
of lose your ass, FTX.
Yeah.
What's going on with that?
Speaking of altruism, right?
Right.
See, he couldn't just be a billionaire, and he couldn't be the guy who like cleverly made billions in crypto and probably like didn't really earn it, but was in the right place at the right time. No, I'm doing this for you. I'm a billionaire for your sake, right? And then it turns out
FTX was a trading platform, correct? Initially,
yes. It was a place where you could buy and sell various cryptocurrencies.
And then they came out with their own coin.
Mm-hmm.
And is that a way to take good money and convert it to his bank account, essentially?
That was a way of creating something out of thin air and convincing you that it was valuable enough to trade your dollars for it. So like if I can just press a button and have 1 million tokens and you're buying them from me for like real, I can't press a button and make dollars. Right? Only Jerome Powell and the Federal Reserve can do that. But I can press a button and make Toce token, and if there's enough people out there who are willing to just buy this token from me, then all right, go ahead.
So he creates an exchange, and then he gets high-profile people like Tom Brady, Steph Curry, Mr. Wonderful, all those guys to
Larry David.
Larry David, yeah. Although in his defense, he said it was not a good idea, right?
So they get, it's a Super Bowl commercial.
Yeah.
They get people to move their money to FTX from other crypto exchanges.
Yeah.
And then what happens?
And then they took it all and gambled it all. We still don't know for sure what happened, but like without knowing, I know. Like they felt like geniuses in the bull market. This is a tale as old as time, dude. They felt like geniuses in the bull market. They could do no wrong. Every dumb thing they do works, and they just do more of it. And then at a certain time, the tide changes.
They were, when you say they were gambling, they were taking that money and leveraging and buying other things.
Yeah, they were buying like all kinds of other tokens, investing in other companies, lending money to people, buying politicians, buying stadium naming rights, and they had their marketing on like the World Series or really the whole MLB season. Everything said FTX. They're paying Tom Brady. They're paying Mr. Kevin O'Leary, Mr. Wonderful. You know who that is, the Shark Tank guy. Yeah. They gave him $15 million just to like promote FTX.
That's crazy,
right? And that was your money if you were a depositor. Which this is based in the Bahamas. There's no audits. So, dude, they were using QuickBooks. Wow. Can you believe that? QuickBooks is made for small business, and this is a multi-billion-dollar enterprise that's holding funds on behalf of millions of people around the world, and they're using QuickBooks
with no SEC oversight.
No, this Bahamian company. SEC don't have jurisdiction there. FTX US was US regulated, and it was the only part of FTX that stayed afloat.
So what's going to happen? I mean, you're a lawyer. What do you think?
In crypto generally, or with FTX?
With FTX.
Oh, man. I would love to say that this guy's going to go to jail and get what he deserves, but it doesn't really seem like that's what's going to happen.
They have to prove fraud, right?
Yeah.
And maybe it's just bad business, not actual fraud.
It's not, though.
I mean, no, then maybe.
It's not about what you know. It's about what you can prove. And I know this stuff because I understand how human nature works. I understand what happens when someone goes from zero to billions, and the type of ideas you get, and the delusions of grandeur and the everything. I mean, I get what happened. He started losing, and he's like, I'm not a loser. I'm a winner. I have to double down and win. And the double down doesn't work. And they're like, well, I'll just borrow some customer money, and we'll make it back real quick, and then we'll put it back, and we'll be fine. And they'll lose some customer money, and they're like, oh, shit, now I'm engaging
Are we
in
talking
fraud.
about the Fire Festival, or are we talking about FTX?
It's all the same thing, yeah. Yeah, pretty much. So, Billy McFarland, actually, I think he just got out of jail not too long ago.
As of recording of this came out 2 hours ago on Business Insider, says that Sam Bankman-Fried says he needs some of his $450 million in Robinhood shares to fund his legal defense as he fights for control of the stake.
Yeah. But I thought he said his whole goal was to make customers whole. Like, he lost their money, and he owns $450 million of stock. And he's like, well, I mean,
his Robinhood
not
stocks,
that money.
his Robinhood stock's probably not doing very well either.
No, I mean, he bought it. I think he bought it. He started buying it at 13. He bought all the way down to 10. Now it's at 8. So it's probably not even 450 million. But I mean, it's 300, 400 million. Like, I'm sure a lot of customers would appreciate him giving that money back to them. And both his parents are Stanford attorneys, law professors. Does he need $400 million to mount the defense?
Yeah, that seems a lot. I mean, maybe I'm in the wrong line of business. Maybe I should go into representing billionaires on criminal defense charges, right?
There you go. Something to aspire to.
So what do you think do you think there's going to be any money, or is it going to be a Bernie Madoff situation? Or, I mean, what do you think at the end of the day, will the investors, if we're going to call them investors, will they get any money back?
I've seen quotes about like maybe 20 cents on the dollar or something like that. I watched John Ray. He's the CEO now. He actually took care of the Enron bankruptcy, and he's presiding over the FTX bankruptcy now. And he doesn't seem very hopeful at all. He sounds like he's cleaning up the mess of a bunch of children. And from what it looks like, they were all taking amphetamines and acting wild in the Bahamas in this group home. I don't know. I haven't seen any like actual evidence of like the whole, what do they call it? Like polycule or whatever.
The group orgies and whatnot.
Yeah. It seems like they were just wilding out. We talked at the beginning, like, man, money is a drug, and they were all overdosing on money.
And so this is really a cautionary tale. I mean, do you think that that's going to put the whole crypto space back a year or two?
Mm-hmm. Yeah, a lot.
Yeah.
Maybe more than a year or two. It hurts. It hurts a lot for the people that really are trying to like make the world a better place, for lack of a better term,
or legitimize the industry.
They're really
right?
trying to push the adoption of cryptocurrency mainstream, and there is a place for it. I think it would be great in a certain capacity, but it's so hard to understand. And so if this is like, it's all about just Pavlovian association. When the bell rings, you salivate. When you think crypto, now you think about fraudsters and losing money. And like, I don't think anybody really knows what good crypto does.
Yeah. I mean, what about NFTs?
Well, the best definition of an NFT I've heard was that it's a shitcoin disguised as art. Because it's still just a coin. Like, that coin directs you to a place on the internet called like I can't remember the term, but just like the intergalactic something, like repository for like all this. So you have like this string of numbers and letters that points to this repository that has this picture there, and so that means that you own that picture. Like, it's not, I don't own a copy. I don't right click save that picture. I actually own that picture. What NFTs will become will look nothing like this.
Has there been anything in history like crypto or NFTs, something that has come into the mainstream and was a legitimate, I'm not going to say legitimate, but was an alternate source of people investing money in, that we can look in history and see that this hasn't worked before?
Well, there's certainly a history of like currencies, alternative currencies and like microcurrencies, and the track record there is not very good at all. But people would say, like, it's not it's a store. This is all up for debate, but like, if it's a store of value, if you're saying like it's a store of value, like, well, I mean, even the stock market, like, we have the Securities and Exchange Act of 1933 and 1934, so it's only been less than 100 years that like stocks became what they are today. And that, like, before that, it was savings accounts, gold. You're probably actually buying like farmland and stuff like that, and agrarian culture, maybe like horses and cows and stuff. It wasn't this like theoretical, I mean, all money, like almost all money now exists as a entry in a computer somewhere, right? It's not like physical. And so I think that this is just the next iteration of that, like being willing to accept that this doesn't actually exist, but it does have value.
Do you buy gold or silver? I mean, some people say that that's a real thing that you can have that's more real than your digital currency, aka dollar or whatever else.
If I had to put all my money in something and I had to choose between Bitcoin or gold, I would choose gold. because I'm risk averse. I don't want to lose my money. And
Well, I'm gathering from this conversation that you put Bitcoin pretty low on the totem pole.
yeah, it's not. Yeah,
So gold, I mean, I want to know how high gold is on that totem pole.
it's not much higher.
Okay.
I mean, it's like very low. So there's two types of assets: productive and non-productive. Gold, commodity, like a silver and gold, Bitcoin. It's all non-productive. Like if you take a block of gold and you put it in a safety deposit box and wait 30 years, you're going to have a block of gold at the end. And the market may be willing to pay a higher price than when you bought it, but it's not going to do. So remember earlier I told you that war veteran put 10,000 away, now it's worth 50 million. If he had invested that in gold, it would now be worth 400,000, not 50 million, because gold doesn't do anything. It just sits there. If I put my money in a productive asset like a business, that business makes money, it takes the money and reinvests into the business. So next year it makes even more money, and then that takes that pile and reinvests into the business, and the next year they make even more money. That's compounding. And so I want things that compound, because over the long term, like it's just no comparison.
Some people say that silver, which is a holder of value, can be used in other things like wiring and I don't know, various applications.
Yeah, jewelry and semiconductors and
that kind of thing. So wouldn't that ability to have some utility be worth something?
Well, that's why I said I'd put it in gold and not Bitcoin. The real, like, I think the philosophical reason why gold is meant to be like this hedge against ultimate disaster is because it's malleable and it can't be counterfeited. I don't think at all, but like probably just not very easy. And so if the world came crumbling down and we were kind of like picking up the ashes and starting over, the ability to mint money would be really valuable. So I would start like printing coins with my name or face or whatever on them and billing my brand and say, hey, you can trust, if you have a Toce coin, like that's value. You can take that and you can exchange it for what you need to feed your family. But Bitcoin is like, if you don't have an internet connection and electricity, you literally can't even access it. So
it's your opinion that the best way to use money is to buy companies?
Productive assets,
because they are working right now for you in a way, right?
I have hundreds of the world's top CEOs at this very moment working on my behalf to build my net worth. They have no idea who I am, but I know them, and I appreciate them.
Well, let's talk about one more thing, is real estate. How do you feel about real estate with respect to stocks and cash and gold and Bitcoin and that kind of thing?
So real estate's a productive asset. It can generate rents. You can, the real estate has a lot of uses. Like as long as, let's just start at the bottom, raw land. Not even talking about what structure, but just raw land. They're not making any more of it, right? A lot of people say we're even getting less of it over time. And as long as someone finds a way to make money and needs a physical place to do business to make that money, you're in business with real estate. And the more money that person can make by setting up shop on your land, the more money you can make off of them. So it's a corollary to just advances in business generally.
Or make money and live there. Want to live on that piece of real estate.
Yeah, I was going to say, and then of course the other thing is that like all humans need shelter from they want to keep their possessions safe. They don't want their kids getting rained on or freezing to death. I mean, these are obvious things, right? Like houses obviously have value. Everybody spends money on houses. Half of Americans' income, more or less, gets spent on houses. Now, that doesn't mean that every house is, that doesn't mean houses are infinitely valuable. So if you pay too much for it, then it's not a good investment. But if we're talking about just the quality of assets, things that people want are valuable, right? People are always going to want land and houses.
But if you run into a cash crunch, you can't just sell the house.
Correct.
Right? You have to have a willing buyer who is ready to purchase that house when you're ready to sell it.
Correct. But in the modern era, everyone's borrowing the money to buy the house, so that's less of an issue.
Until interest rates get to 9,
rates get up, yeah.
And that changes the quality of house or the type of house that you can purchase with the interest rates going up. You don't have that problem with the stocks.
You don't have that problem with stocks, but I mean, I guess you kind of do at the same time, because if you need the money, like with stock, I don't advise, and I probably should have said this earlier, I don't advise people buy stocks with money that they think that they're going to need anytime soon. Like it should be a very contemplative, like long-term, I'm not touching this money. Now, if you said I'm going to hold for 10 years and then it doubles in 5 years and you're like good with that and you don't want to lose that double and you sell, like, okay, fine. You know, you're paying tax for selling. So I still don't recommend, I say buy and never sell, but you still have the same problem. Everybody wants money and needs money when no one has money. Banks want to lend you money when you're rich. They want to give you money when you already have money, but when you need it, they don't want to give it to you.
That's right.
Right? So that's true with pretty much every asset. Like, it's rare that the whole world's in some kind of liquidity crunch but you're okay. Like, we're all kind of, unless you plan properly.
Awesome, man. Well, thank you so much. If you've been very insightful and taught me a lot, where can people find you?
I'm on the internet. I write a blog at Substack, toce.substack.com. That's TOCE. I'm on Instagram, just at AJ Toce. That's my name, AJ TOCE. I like to tweet sometimes. And then, of course, tossfinancial.com. You can always find, I'm always putting blog posts there and connecting with clients. So I'm out there. You can find me.
Awesome. Well, if you're out there and you need some financial help, this is the guy. He's very smart and he knows where to put you in the right spot and in the right direction. Thanks, man.
I appreciate that. Thanks.
Appreciate it, bud.
All right.
I hope you enjoyed the podcast. None of the opinions of the guests reflect that of my own, and nothing in this podcast is to be considered legal advice or create an attorney-client relationship. This is for entertainment purposes only. Thank you for watching and listening. Hope you enjoyed.